Welcome, everyone. Thanks for joining us today. I know everybody's super excited to learn about the new developments of FinCEN. Whether we want to learn about it or not, we're going to be required to. So here we are, and I'm glad everybody could join us here this morning. I'm sure there's going to be a few more people that jump in. We will have the handout of this PowerPoint available, as well as a one-pager explaining FinCEN. Hopefully in a very succinct, in what I think is a very succinct way, so that everyone on the call and moving forward can understand it, how it impacts you as a real estate agent, and how it impacts your clients and when. So just to give you a quick introduction of FinCEN. FinCEN basically is an anti-money laundering statute that the government has been for years threatening to enforce. They actually did it in a few states such as Florida for a time, and now the whole United States is required to basically report information that our expert here, Rick, is going to go through with you here. So I'd like to thank all of our partners that have joined us and any of our entities here. So thanks for joining us today. This is kind of a look at our Capstone family of companies. And if anybody's interested in talking about any of them and joining, we certainly love to have that conversation. The footprint, I mean, we cover all of Pennsylvania. We actually are licensed in Maryland as well. So we do cross-border transactions there in Maryland. Derek Quick, who I'm going to introduce here in a second, is one of our attorneys on staff, and he's an expert when it comes to Maryland as well as Pennsylvania. I'm going to skip forward here for 1 second and then come back to that slide. But just a little introduction about us. Jolene George, my business partner that keeps me in line, is on the call here as well. Doug Foltz, who has joined us as of last year and has 25 years experience in the real estate industry, coming from a perspective of where everyone on the call here sits from. So he's been a realtor and a manager for the last 25 or so years, running a Coldwell Banker office in Lancaster, one of the largest in the country. One of the things I wanted to make sure I relayed to everyone, so not only do we have incredible experience here on the title side, but we also have a relationship with Zully Law. So this enables us to do things that others cannot. Our motto here is, we're committed to close. How do we get a deal to the finish line? Obviously, doing it above board, making sure it all makes sense for everyone. But it's here at Capstone, we talk about how we get a deal done, and give you options, not, hey, no, we can't do this type of transaction. With Zully Law as a partner with Capstone, it allows us to do things others can't. If anybody needs easements done, if you need advice, if you need to form an LLC, whether it's for yourself or whether it's for an upcoming client that's going to purchase a property, we can turn them around super quick. Agreements of sale, if you need assistance with writing addendums, deed transfers, and frankly, Doug is a quasi-paralegal in this law firm as well, because he knows the par agreement of sale probably better than most. So, Doug, I'm going to turn this over to you. You can talk about the Capstone difference and go back to the agenda there.
All right. I appreciate it, Brian. Thank you for the introduction. That always scares me when you throw that out and puts me in the position of the unauthorized practice of law, right? So now I appreciate the the kudos on that. But really, I think what we like to try to ensure that everyone understands is, with our depth of our company, we really want to be a strategic partner with you in your business, and not just a title company that you go to the day of closing, you deal with them to get your settlements across the table, and that's it. we want to be able to assist you in all aspects of your business. So whether that is on the legal side, as Brian mentioned, you run into issues along the way, or you need that simple LLC created or some type of legal document, or if there's some other aspect about your real estate business that possibly we can assist with, really diving into our experience coming from that brokerage side of the business. We want to be there and help you every step of the way. Brian also mentioned earlier that we do have multiple companies throughout central Pennsylvania that agents have partnered with. That we do have the opportunity for agents to become partners in those organizations, and there are some great benefits that you can take advantage of if you are in fact a member of one of those organizations. One of the things you'll see on the screen here is we do have benefit options, health insurance options available for our agents. So if you are a partner with Capstone and one of our affiliated companies, that is an opportunity that you have to jump into our health, dental, vision, and even pet insurance benefit programs that we have available. So if you're curious on any of that or of any of our other services, there's some contact information here on the screen. You can reach out to us anytime at committedtoclose@capstonelandtransfer.com. So please feel free to reach out. Another highlight, we were nominated last year as, oops, sorry about that. We were nominated last year in 2025 as simply the best for title companies in central Pennsylvania. And those nominations are ongoing right now for 2026. So you'll be seeing some correspondence from us, hopefully supporting us again in our attempts to be nominated again here as simply the best title company for 2026. So be on the lookout for some information coming on that as well. All right, so we're going to dive into the essentials of FinCEN. Sorry, I think we have multiple people jumping on the screen here at the same time. Sorry about that. But we'd like to just give you kind of set the table for what we're going to be going through today. Obviously, Brian just went through and introduced our team, and hopefully you have an idea of who's going to be on today and talking with you. Rick, our paralegal and real estate FinCEN expert, is going to give us a complete breakdown on what is happening with FinCEN and the reporting and exemptions that go along with that. We're going to get into a frequently asked question part where we'll be able to go through some of the common questions that we've encountered, and then we'll open things up for a group discussion. So feel free along the way, throw your questions into the chat. That way we can kind of start logging those and then come back to them once we're finished. But with that, I'm going to turn things over to our expert on FinCEN, Rick Hansberry. Rick,
thanks very much.
Have at it.
Thank you, Doug. All right, quick show of hands, because some of you have your cameras on. Are any of you money launderers? That would make it easy. All right, we got a few. That's good. Anyone? All right, a few more. All right. That's really the whole reason that this thing exists. The government is trying to identify and stop people hiding behind entities to move money. That's really all it is. They're trying to create another reporting requirement so that they can follow the money. A lot of private entities are not subject to disclose who owns them or who operates them. And FinCEN is actually going to be able to trace incoming funds for certain real estate transactions to make sure that it's going where it's supposed to. That's really all it is. So apart from that, these new reporting requirements, they might be a little painful, but just like everything else we've had to get used to, the TSA screenings, Real ID, I mean, pretty soon this will just be one more thing that we have to do for certain deals. So with that in mind, I know that some of this material will prompt a question. Rather than stop and start and answer questions and disrupt the flow, we hope to be able to answer some questions as we divulge the information. So if you do have a question, feel free to pop it in the chat. Rest assured, we will answer it at the end. If you prefer a private answer, you can always email it to us and we'll get back to you directly online. And we are going to have just an open forum of Q&As at the end. So if we could just ask you to hold your questions until the end, just know that there will be time allotted for it. All right. So let's get down into the basics. The requirements started March 1st, and believe it or not, we've had 2 transactions already that qualify for reporting. Most estimates are that it's going to be, for title companies, maybe 10 to 15% of our transactions are going to qualify for these, and you'll see why soon. But it's just a new reporting requirement, and as I said, it's designed for closing the transparency gap. If you just saw an LLC, you're not necessarily going to know who owns it, where's that money going, who's it going to within that LLC. That's what the government's trying to get a better handle on. So the reporting steps are pretty simple. Is the transaction reportable? That's the first criteria that we're going to try and answer. And if it does appear to be, might there be an exemption that we could use so that we don't have to? Maybe the parties involved would get an exemption, or maybe the transaction itself, due to the way it's structured, would get an exemption. And then what data is needed to be collected. So in order for a residential real estate transfer to be reportable, all 4 of these things must be true. It's a pretty simple list. So is it residential? Commercial does not apply. So is it residential? If it's residential, is the buyer an entity or trust? So if we have those 2, the third one is it non-traditional financing? So there's no mortgage through Fulton Bank or any other traditional lender. It's a private lender or a hard money lender. And then if those 3 criteria still apply, is there a possible exemption? So between those 4 things, we're going to know if we have a FinCEN reportable transfer. So let's deal with residential first. Residential, we all deal with on a day-to-day basis, but that does include some things you wouldn't think are residential. For instance, a building structure that holds condominium units, that could be deemed commercial in some respects, but it is considered a residential transfer. Land intended, no building on it right now, but they're going to build on it, and it's going to be residential property. That is residential. That is a residential reportable transfer. If it's zoned commercial right now, but they're going to convert it to residential housing, that is a reportable transfer. Zoned agricultural, same thing. Even if it has a farm and it has a farmhouse on it, that is a residential component that could make it reportable depending on the way the deal is structured. So as you can tell, going through this list, there's going to be exemptions, and we'll talk about those in a little bit. But the main criteria are residential, non-traditional financing, and to an entity or trust. Just keep those things in mind as we go through. So, entity or trust. All types of entities apply. So LLCs are common right now, but it applies to corporations, partnerships, any form of trust, any type of limited partnership or other type of entity. Same thing with a trust. So if it's not a person, think of it that way. It's not an individual, and it's something that would have an EIN all its own. That's how the government knows it, as an EIN, that it's not a person. So the criteria there is they're looking for who is the primary people responsible for that entity. These are the buyers, the people that are purchasing that residential real estate. So they want to know who the decision makers are. And generally that's going to be who constitutes a majority. They're looking for 25% ownership or more, or a manager or someone who's authorized to act on behalf of that entity. So the FinCEN reporting requirements, they want to know the name, the address, the social security number, date of birth of these people. So they want to know who is actually operating these entities that are intending to take title to real estate. And the other unique thing that we're not used to reporting is they want to know the bank account information for the buyer, not where the funds are going. They want to know the incoming funds for the transfer that's about to occur. So the bank that it's coming from, and they want to know the legal name of that bank, and they want to know the account number. We expect a lot of pushback on this. It's typical. A lot of people don't like to give out that information, but the government specifically asks for the name of the bank and the account number, and that's part of the reporting requirements. That's going to be something that, a lot of people will kick and scream about, but it is a government requirement.
Hey, Rick, before
Yep.
you go on to the next slide there,
Sure.
I think you said it, but I just want to make sure I'm reiterating it here a little bit so everybody understands. So like if they're coming, if the buyer is the trigger, so if the buyer is an entity or trust, that's the trigger. Now, the challenge is just say it has 4 members and one of those members is the signer or going to be the signer. They have authorization to sign at settlement. So we would need their information. But the way FinCEN requirements are, and Rick confirmed for me that because of that, the other 4 owners, if they have 25% interest or more, and any managers and any authorized signatories, we would need all of their information,
Right.
not just the person coming to settlement to sign off. Rick, did I get that right?
That's correct. We need to know anyone that has 25% or more, anyone that is a decision maker within that particular entity. So if there are managers that aren't members, if there's someone designated to act on their behalf, either by a resolution or a consent or within the operating agreement itself, anyone that can act on behalf of the buyer, FinCEN is asking that we provide that information.
So that's much different than some of the situations that we're used to here with an entity. As long as we had a resolution for John Smith to sign off, hey, we're good to go. In this case, we are still going to have to collect information from the others.
Correct. And again, I can't emphasize enough, this is for the buyer. The same rules do not apply for the seller. As long as we have a valid entity and a signatory for the seller, we're okay. All right. So entities, I know that we'll have some questions. Now, tackling the non-finance transaction. Here's a couple of situations that are going to make things reportable. First of all, if there's a lender, it's not reportable. So if you're doing a traditional financing thing to an LLC, not reportable. But suppose it's a private lender, an individual or a company, a seller financing deal, that would be also reportable, because what they're looking for, the lender criteria is something without an AML or an SAR program. A few days ago, I didn't even know what an SAR program is, but it's suspicious activity reporting, and AML, anti-money laundering policy. So lending institutions have all these things in place. They're doing this due diligence on these existing members and on these people that are acting on behalf of the entity that have the bank account there. So that's why they're exempt from reporting. So a traditional lender that has it, you don't need to report. But it's a non-finance transaction that is part of the reporting requirements. So residential entity, Non-traditional financing. We're going to hammer that home. Okay. We'll talk a little bit about the exemptions, because if you do have those three things, there still might be an exemption to get out of the reporting requirements. A transfer that is the result of a death, or a divorce, a bankruptcy estate transfer, a foreclosure, a tax sale, again, to an entity and all the other criterias, or a 1031 exchange. So transactionally, feel free to check with us. If you meet those first three criteria and then you're wondering, hey, is there an exemption? Here's our deal. Please feel free to reach out and we will clarify whether or not it's a reportable transfer or not, because there could be an exemption. There is a list, but we don't want to burden down the talk with giving you the primary information and the information that most people will deal with on a day-to-day basis.
And Rick, honestly, most of these exemptions here really aren't going to apply to most transactions. I mean, if you have an investor that's buying properties from a foreclosure, when they buy it from, when they receive it from the foreclosure, again, that is not a reportable event. However, when if they're flipping the house, when they go to sell it and an entity is buying it, another entity is buying it, then it might have to be reportable. If it's just an individual, it would not be reportable.
Correct. So even if it is a trust, there are some exemptions. We won't spend a lot of time on this, but if it is a publicly traded trust, or is it a trust that is registered with the Pennsylvania Securities Commission, and we have a letter affirming that, it can be an exempt transaction. So again, always ask. Buyer entity exemptions. And this is kind of goes without saying, but if the government knows about the entity and the government is in some way regulating the entity, then it's not going to be a reportable transfer. So banks, obviously, a securities firm, a governmental authority, a public utility, insurance company, these types of entities as buyers, they're not going to be reportable transfers. So the data and the reporting is done through a government website called the BSA reporting system. Right now, they're just starting this. It is something that you'll file online. There's no filing fee, but we'll get into a little bit of the specifics about how we're actually going to report these transfers that are going to take place that meet all of this criteria. So a lot of this stuff we're collecting already. So we talked about some of the unique requirements initially. So this is just to reiterate. The information that we're going to need for an entity is really not all that different. If you look over the list, we're always getting the legal name and the address, the EIN number. We know how the money's coming in. It is unique that we'll need to get the bank legal name and the account number where the funds are coming from. But the payor name is a little different. In other words, they want to know, hey, you're getting money from so-and-so lender. Is it going to this entity, or is that money going to a different entity that's not necessarily the buyer? They want to know if the money's going to just the entity or something else.
Yeah, I think a great example there, Rick, would be gift funds.
Yeah.
Funds are coming from a mother and father for their kids to buy a property, and they're buying it in an LLC. If they're buying it within some type of entity, then that payor name and bank account information is going to have to be collected.
Correct. And just to be clear, all the incoming funds, if it comes from different sources, we're going to need that bank and bank account information for the incoming funds. Again, incoming source funds.
Hey, Rick, just to clarify that. So if a buyer, let me ask you this, if a buyer has two bank accounts and there's money coming in from two different bank accounts, you need the account information, lending institution information from both.
That's correct. So sellers getting off pretty easy on this because a lot of the information is stuff we're collecting anyway. But we do need to report the full legal name of the seller, the date of birth of the signatory, the address, and either the social or the EIN of the signatory. That's going to be the main reporting requirements for a seller in this transaction, whether it's an individual or an entity. So when do we do this? It just started March 1st, so we don't have to worry about any transaction that occurred before March 1st. But reports are now due to be filed. The last day of the month following closing is the absolute deadline. The guidelines from FinCEN are 30 days after a transaction or the last day of the month following a transaction. So just think of it as that. If you were, the example on the screen is if we close on April 15th, it would be May 31st. If we close this month, it will be April 30th. So I hope that that's clear for everyone. It's the last day of the month following the transfer. Another change, and I'm sure you'll start to see this, is that settlement companies, title companies, lawyers, you're going to start to see a line item on closing statements, on settlement statements that are reportable transfers, and they're going to charge for this. Again, it's not a filing fee to record the form with the government. It is the time, expense, energy, and effort in collecting the data and assembling the form and filing it with the government. It is above and beyond the title insurance premium. It is above and beyond most closing costs. It is just something that is in flux right now. We estimate that new fee to be in that neighborhood. That we've seen people charge more, and obviously some people will charge less. You may not see a line item at all, but it is something you can expect to see on most reportable transactions.
Yeah, just to expand on that, we went on the lower end. So there are companies out there that title companies are engaging to handle this reporting, anywhere from $150 to $350 per transaction. And most title companies across the country are charging $150 to $350 to $400 for this service. Again, it's an extra step. It's obviously, we have to make sure this is reported correctly. If it's not, all of us could be in a world of hurt.
And we are taking all this, seriously, because this new initiative comes along with anything else from the government, penalties and fines for non-compliance. So we actually do have a reporting requirement for these legitimate reportable transfers, and they're going to be looking for non-compliance or incomplete reporting. So when our buyers and sellers get the request for information, they're going to basically certify to us that they're giving us all the information that there is. And then we're going to then certify that we have all the reportable information. The guidance from FinCEN on their website says that an incomplete is treated as the same as a late or non-filing, and they will impose penalties and fines of over $1,000, over $1,400 actually, per violation and continued on up for repeated offenses of negligence.
Hey, Rick, did you ever figure out how they came up with these numbers?
I did not. Matter of fact, they've changed it within the past month, and it's gone up. So maybe they're finding new ways to increase the fine. But yeah, it's very odd number. But what they're looking for is people, and we know these people exist. People that just say, "Well, I'm not going to file taxes. You know, that's my money. I made money. I'm not going to file taxes." Same thing. I'm just not going to file this report. Well, willful noncompliance could be subject to a substantial penalty, $250,000, and/or 5 years imprisonment. So it is a serious set of, I don't want to call it threats, warnings, that the government is saying that, like, look, we need to collect this information. We want this information. You're responsible to report it, and you're responsible to comply with the requirements. So obviously hearing that, you might have seen the color drain from Brian's face a little bit. So if I'm not mistaken, I think we have actual footage of the day that Brian found out about these penalties. I'm not sure if we can show it or not during the presentation, but oh, Dustin, are you able to show it? Okay. That is actual footage of Brian learning about those penalties. So obviously we're kidding, but you know, Brian has shaken off that nightmare, and he and Doug are going to take us through some of the most frequently asked questions that we've received about FinCEN and the new reporting requirements.
Great, guys. How you doing? So just, you know, to summarize, Rick, cash transactions that involve a private lender. So I've spoken to many of the private lenders here around South Central Pennsylvania, not all of them, but most of them. They, none of them, so private lending in the flipping wholesale world, those lenders that most of us are familiar with, they do not, the ones I've spoken with, do not have an AML, anti-money laundering, or any type of system in place to report. And because of that, they're not really considered a institutional lender. So we're going to require on those transactions, when the entity is a buyer or the buyer is an entity or a trust, we're still going to require that we get their lending institution's name and account information. So just keep that in mind. So jumping in here to some of the frequently asked questions that we've had over the past couple of weeks. Husband and wife want to convey their rental property into their own trust or entity. Is that a reportable transfer? So in this case, they're either transferring it after settlement. So settlement occurs. For some reason, the lender that they utilized on that transaction said, hey, you got to buy it in your own personal names, whether it's a husband and wife or an individual, but they want to end up with that property into a trust or a separate entity. When they make that transfer, even if it's for $1, it's a reportable event when that occurs. So just keep that in mind. Anyone that wants to move their properties into an LLC, again, LLC is the typical one utilized in this day and age. It would be a reportable event. We would have to jump through these hoops, make sure we gather the correct information. Even though there's no money changing hands in a transaction like that, we still have to report that transfer in and of itself. Doug?
All right. Are seller finance transactions reportable? And the answer there is yes. So the three elements that were mentioned earlier, the cash transaction or a non-finance transaction, buyer taking the name of an LLC or a trust, and it's a residential transaction, then yes, those seller finance deals would still be reportable. So there are some questions that we've been getting, and I saw some in the chat here that we'll get to, regarding different types of financing. And it really comes back to that idea of, is it a lender that has a AML in place or some type of reporting in place for anti-money laundering? Okay, so one of the questions that came up was, well, what if I have a line of credit and I'm using a line of credit for the funding for that transaction? Well, when that buyer purchases their home, it's really like bringing cash to the settlement, because there isn't an actual entity or an actual lender involved in that transaction that's lending on that property. They've lended against another property and provided that buyer with access to that cash from their other property that now they're going to use to turn around and purchase the next property. So anytime you have those three elements where it's residential, name of an LLC or a trust, and there's no institutional lender involved, it is a reportable transaction. Ryan?
Thanks, Doug. Will this delay my closing? I think this is a question we received several times over the last couple of weeks. The bottom line is, hey, as long as we have the information, we're good to go. Like, so as long as the buyer is cooperating, providing that information, I think one of the things that all of us can do on this call is just make sure that if you have a client that's buying a property in a trust or an LLC or artificial entity, they are going to be required to provide information for anyone with 25% more or ownership in that company, any manager. So even if the manager is an employee and not one of the owners, but the manager has the power to sign off, and most managers do, any authorized signatory that they may utilize. Every time they have a transaction, we are going to have to report all of those individuals as a FinCEN reportable transaction. So as long as everybody understands that going into it, and again, even in a situation where they would transfer into a trust at the last minute, hey, I want to buy this property in my trust. My state attorneys who represents me said it would be a good idea to handle it this way. Even if it's at the last minute, that information is going to have to be provided.
Yeah, Brian, and I think those are ones where we anticipate there will be some issues or possible delays. Those buyers who took an agreement of sale in their personal name, but then at a later date, usually the week before settlement, they notify you that, hey, we do want to put this in the name of an entity, whether that's a LLC or a trust. That could cause delays if they're not cooperative in gathering the necessary information prior to closing.
Yeah, agreed, Doug. I mean, I think anticipating this as much as you can on your buyer side to avoid that is the key.
All right. So kind of along the same lines, what happens if a buyer refuses to provide the information required? Well, I don't know. Based on that earlier slide or the little video, I don't think Brian would do very well in prison. So, I think, any title company,
Who's your daddy?
any title company, any attorney, anyone who is conducting the settlement is going to require that this information is collected prior to settlement. So I think if you could just mute, there we go. So any company is going to require the information, and if a buyer is non-cooperative or does not want to provide that, it absolutely will cause problems for your settlement.
And one of the questions we've gotten is, hey, does this change from title company to title company? The answer is no. Like, no one's going to be able to close without this information, or they could end up behind bars or with some big fines. Next one are farms reportable transfers. Rick did touch on this. A farm with a farmhouse or the intended use of the included farmhouse, if it's residential, 1 to 4 family, the transaction will be reportable. If it's pure farmland and no house, generally that transaction would not be reportable. So again, if there's a farm, if there's even the type of zoning does not impact whether or not it's reportable or not. So if it's agricultural, if it's zoned agricultural, if it's zoned commercial, it does not impact whether or not we have to report. It's what the intended use is for. If it's going to be utilized in any way, shape, or form as a 1 to 4 family residential property, it must be reported.
Okay. I received a notice that I should file an annual report. Is this the same thing as the FinCEN requirements? And the answer is no. Over the last year, Rick, as our in-house FinCEN expert and our in-house entity LLC expert, he's been helping a number of, possibly a number of the folks that are on this call answer the question around reporting that's required for entities in Pennsylvania. So this FinCEN real estate reporting is not, this is specific to a property transfer and not specific to an actual entity, as the reporting is required for entities in Pennsylvania. That all started last year. So if you have questions on what those differences are, or if you're not sure what the annual reporting requirements are, feel free to reach out to Rick. He's an expert on that side as well. Can definitely help you through that process.
Please do so.
And if your clients want at the last minute to transfer it into an LLC and that's not created yet, that is something certainly we can assist with you when that happens. Just remember, whoever they put on as members or managers, we will have to report them.
That's right. Careful what you sign up for.
What if the LLC and entity is owned by another LLC or entity? So we had this question come up already. And so there's many times for whether it's estate planning purposes or something of that nature, that an LLC is a member of another LLC or another entity. Limited partnerships are known for this. So, the limited partner and the general partner sometimes are LLCs when they're created. So the thing is, just assume when an LLC or another artificial entity is an owner of another LLC, we will need all information for the LLCs. So the first one, we need all the information. And if one LLC owns 25% of that LLC that's buying the property, we actually need the operating agreement. And this is typical in any transaction before FinCEN, the operating agreement for that LLC with the 25% membership interest. And any other member of that entity, LLC, that would own that 25% interest, we would need all of their information to report as well. So again, this is where the government is trying to cast a wide net to stop any money laundering that may be occurring across the country. Yeah.
And basically the guidelines are the government will drill down until they can get to an actual person. We'll go entity to entity to entity until we can get a reportable person.
Okay. Is a refinance transaction reportable? And the answer to that is typically no. So most refinance transactions are not transfers. So the ownership of the property is not transferring. However, if there is a circumstance where the property is being transferred as part of that refinance, then yes, that is a reportable transaction. So refis are, definitely becoming much more common in the current rate environment that we're entering into. Keep us in mind if there's anything we can help with on your refinance transactions. But typically here, if it is not a transfer, that does not have to be reported.
All right. So we did have a question or two that I don't think we have answered that is in the chat. We have one from Amanda through Jolene because she's driving. Hi, Amanda. What is the government doing with the info? Should hard money lenders be worried about tax implications? Well, I think everyone always needs to worry about tax implications, but Rick, do you want to take that one?
Well, the government's keeping the database, right now, and the reporters, that would be us, we're required to keep this information both electronically and in hard copies for 5 years. Whether or not there's anything beyond that, I can't really speak to. I have not seen a database of reportable transfers. I don't know that they're going to be searchable. I think it is a direct upload to a government website that is retaining the information, and we're keeping it as well, but it's not published anywhere.
Yeah, I can expand upon that. So these will, like, no one else but the governmental entities involved will have access to the information. It's not shareable. It's not even Freedom of Information Act. You cannot even access it through that if somebody would ask. So we will keep it as secure. We'll keep it secure here through our Qualia system. And then the government's required to keep it secure as well. Obviously, they don't want this getting out to anyone or personal information getting shared, but the government will know everything that is going on. The private lenders, obviously, tax implications apply to them right now, and they will, have to provide, any private lender that does not have an anti-money laundering or suspicious activity reporting system in place. They're going to have to provide their banking institution as well as their account information and their name, any fictitious names they utilize, any doing business as names, etc. So they will have that information for sure.
We have another question here, Rick. Self-directed IRAs as buyers or exchanges, reportable or no?
Well, is it an entity? A self-directed IRA, I believe, I haven't seen too many of them, but I believe that they get their own EIN.
They do. They do. And if they're not filed with the Securities and Exchange Commission, if they're not basically a publicly traded company to some extent, it could be private, it's going to be reportable. Now, the one thing we didn't talk about, there's this reporting cascade that we would bore you to death with this. But the bottom line is, if your IRA is through a publicly traded company, which most probably are, it would either be a requirement on us to report, or they could take the obligation to report by doing a letter to us saying, hey, we're going to report this transaction. I'm summing it up in legal terms here. They're going to report the transaction and basically take the obligation off the hook of the title company to do so. But as in most cases, they will be reportable.
Each transaction should only be reported once. And as Brian said, the cascade's not worth getting into on this call. Most times it's going to be whoever is facilitating the transfer. So whoever is holding settlement, whoever is recording the deed is going to be responsible for the report.
And just something to point out here, as I know some of you represent investors, some of you are investors on this call that work with us on a regular basis. Every trade, like once we report the first time, it's not like it goes away. It's every transaction. And obviously we will have that information in our system. But let's say, ABC flipping company deals with us 12 times a year. Every single one of those transactions is going to be reportable. And we will have your information at that point in time. You're just going to have to confirm for us that nothing has changed, no new members, no new signing authorities or managers, no new bank accounts, that information every time we do that. So we do have another question here. What if you have multiple bank accounts? How do you know which one to share? So it's going to be the one the money is coming from for the transaction. So if it's coming from 3 different bank accounts, you're taking 10 grand out of one, 10 grand out of the other, and 5 grand out of another, all three of those bank accounts are reportable. You have any other questions there, Dustin, Doug?
I think we hit most of the questions in the chat. Does anybody have any other questions that they did not throw into the chat? Feel free to unmute or.
Yeah, unmute and ask your questions. Again, while we wait to see if anybody has any questions, just remember, cash transactions in most cases, or cash transactions with a buyer that is either a trust or entity, that's what triggers the reporting right there. If they're receiving financing and it's from a private lender, then that's going to trigger financing. If it's a transaction that involves an institutional lender, there's no trigger. So a majority of the transactions are not even going to be impacted here. It's just those cash transactions or transactions involving a private lender.
Continuation on that bank account question, why would the authorized signer need to show account information if not on the LLC and the money isn't coming out of the authorized signer's account?
They're not going to have to sign. They're not going to have to provide information from an account the money is not coming from. So it's the key is, where is the money? Follow the money.
Yeah.
That's what the government is trying to do. Follow the money. So if the money is coming out of an account with Members First, that's the information they're going to need. We're not going to need information from the authorized signer if they're not the one, it's not coming out of their bank account. However, if money's coming, is gift funds, if money's coming in as gift funds and the buyer's also bringing money to the table, that gift fund bank and bank account information will have to be provided. The buyer's banking institution and account number will have to be provided. I see we have a hand up there.
Wow.
Yeah, that's me. So I also have a question about EMD deposits. So I know most EMD deposits get deducted from the listing agent's commission, but what if the EMD is being brought to the table? Do we need to get the bank account information from where the EMD is coming from, as well as where the EMD came from, or just one or the other?
Yes, we need both. We need source funds. So whatever funds contribute to the total amount for the transaction, we need those funds.
I guess we're going to have to clarify on the EMD whether we're going to have, because it's most likely going to be coming from the real estate broker's account. So we're going to need that information as well. I think it's just if the buyer, I'm pretty sure it's if the buyer's, whatever bank account the money's coming from for the buyer is the important piece.
All right, another question. What if we hold escrow with Capstone?
Again, it's going to be where is the money coming from the buyer? That's the important thing. Like where did that money come from?
All right. Any other questions? Anybody else in the crowd?
This is Carrie. I just wanted to answer, I know the other question about will they need bank accounts. If you're an authorized signer or another member, these are the only things that they need. They need your full legal name, date of birth, your address, county or counties of citizenship, and your tax ID number, and then your relationship to the entity. Those are the only things that they're going to need from you.
Thanks,
Perfect.
Carrie. And then just following up, guys, if you have any questions, feel free to reach out to your settlement officer processor. Obviously, Rick is our in-house expert when it comes to FinCEN. he was working hand in hand with Carrie to get this done. And then, well, Jolene's always the expert on anything and everything title. So don't forget, you can reach out to any of us. I think all of you have our cell phone information. Just do not hesitate to email, call, text. We'd be more than happy to reach out. So thank you for joining us today. We will be sending out this PowerPoint. We also have a one-pager kind of walking everyone through this. And I'm sure there's going to be more questions that come up. So as those questions arise, feel free to reach out to us, and we'll talk to y'all soon.